Oh, McGraw, things changed from what you sent. Look at that, a moving market. How do those levels get violated? These guys need a little lessons in looking to the left. It's coming, it's coming. All right. Okay. So yesterday was that kind of go nowhere day. The gap down got things rallying like they were going to go to the moon. And after that was alleviated, things went nowhere once they reached price resistance. That was there to the left. S&Ps got up here, up in this area, and then was nowhere land. As we see, whatever happened here around 3 a.m, I guess Europe opened up, Germany opened up, and next drop going through the next support level there on the S&Ps at 3640-ish. And so now we are into the void. Right? So as prices move up into this area right here, it should be right around here, these overlapping opens and closes. This is still in an uptrend, so we just don't want to short into that. It is down a bit from the high here, but as far as today goes, ideally, I think a little bit more move to the upside at the open, coming up into this area, and then maybe some sideways price action or breakout bar failure. Looking at the 15, here was this topping tail, an attempt to go down, and it flipped right back up again. So a little caution on the short side for the moment, and this is a little extended. So we shall see in this area here how that does. There's the top, and it should not get above that area. If it does, it should be like a little peekaboo and then roll back over again. So as this comes down toward 3600 area, that's going to be for now, the most significant area where buyers are going to step up. You can see the bottoming tail bar there and a big number. So SPX put spread, right, on the way. If we do get the next move down, look to do it under 3600. If there was premium, I would say above 3680. You've got these lines of defense here. It's far enough away to get above there. Something is happening to get above 3680. Right? So that is your last line in the sand before, saying, hey, the retracement here is beyond normal for, the corrective action that's begun. And of course, the weekly, we've got the rest of the day left, but assuming that we end in here or a little weaker, we're going to have the beginnings of a bearish pattern. And all eyes next week will be on whether we break last week's low. Not so much this week's low, because this was just a peak above the high, and so far an inside bar. We'll see if by chance it does get down to 3600 today. That would be interesting. And then what is a key support level with 2 weekly bars in that area? In any event, 3600 with this pattern, I suspect this level does not hold next week if it should break down through there. Why? Because you've got a breakout after a resting period. We've talked about resting periods multiple times this week, and the fact that this market, after resting periods, needs more rest. That's self-correcting uptrend. So 3 weeks of rest, right after a wide range bar, totally normal, right above it. and then it pops up. Well, those that read the letter last week, I said, there's no doubt, almost like 100%, this market's going up. And I said, that's a worry in of itself with the internals, so on and so forth. And, everything was so convincing on many weekly charts, of course, daily charts with last Friday's rally. And now we see where we're at. So, okay, we'll wait to see what today brings, but below 3,600 next week. And then I would say we're going to have about a 100-point range in SPX to jiggle around in with no meaning or not much of a meaning next week, unless we can break down below 3,600. And then really, in reality, the next level isn't that far away. Let's call it 35.20, give or take 35, whatever, somewhere in here. I don't need an exact number. We can see this cluster of bars in that area there. So that's it for now. As it comes up here, I expect sellers, and we'll see how it shapes up. Let's look at the other markets. So, McGraw, you said this gamma ray, they're adjusting things to what levels? I'm reading your thing there. 3650 to resistance is 3650 to 3600. That's got to be support. Oh, some support. Oh, 3650 is resistance, they're saying. Aha. Well, that certainly gives them a very wide area. Well, I like it. Are they calling that support and resistance based on a chart or their gamma ray gun? The ray gun. Okay. All right. So here's another situation where some type of holy grail analysis just happens to line up with price action. And always interesting, just like fib levels and fib symmetry and the square of 9 and all that other stuff. Anyway. All right. YM has aim it to the left. There you go. And rolling over here. This was another one we talked about, the slowing momentum ad nauseum, and a little rounding top here, breaking the lows. And it's coming up here a bit up into the resistance area. Same story on the weekly, so on and so forth. Wall of worry starting to roll over. That's wild and whippy. This has been the leader. And as we look at the daily chart, like, okay, no big deal. Uptrend, resting again. Okay, another rest period. Sure. Let's see what happens. Below 1880, it's beginning of a problem for that. We got a slowing momentum candle, a little topping tail. Day's not over, but with a topping tail, which, with other markets, what they're doing, and this market slowing down here, the idea of getting to 2000 is beginning to look a little shaky. And certainly if it breaks below this week's low next week, that'll increase the probability of not getting to 2000 in the short term. So everything's correcting. Bonds are coming off of that low with a little bit more authority today, as they've been hanging there. Red bar ignored for the moment. Well, that's a weekly chart retracing deeply back up into that bottoming tail, bullish 180 reversal, bonds going up, interest rates going down. So TBT, which was starting to curl up, where are you, TBT? Here's the 10-year. I thought I had TBT in here. Yeah, things all over the place. But, gaps because the bonds are gapping. But, last week was this move up. Now it's an inside week. And so we are looking at this trading range here with basically, what I explained in the letter was, we've kind of got this trading range going on within a trading range, which is just running in place. And oil, I put an alert over here for crude oil because so far it was an inside day, nothing wrong with that. But when you see a resting period of almost 2 weeks and it breaks out and it doesn't close at the high, that's suspect. You had this little pullback, you went up, you rested again. Why couldn't buyers push that up to the high? Why are they selling it or taking profits already if they bought this breakout or if they're long selling into that? So when I see a breakout like this with a minor topping tail, it immediately triggers the thought, be careful, breakout bar failure, see what happens on the next bar. And if the next bar is an inside bar, you put that alert back up under the low of the inside bar. Now that one's not done yet. So I've got my alert down here, because this could turn into, a larger red bar. I don't know. But so far it's just a resting period. And the weekly has run up multiple weeks in a row, so a little rest would be normal. And the beginnings of deterioration start in a lower time frame. So that gives me what I just said. Why you need a rest. Topping tail, not supposed to do that historically. That pattern is supposed to result in something like this, right? This is curling up, and you see, closing at the high, push up, push up, push up. That's what we want to see after rest. And this was fine. I was like, why are you resting again after the pullback? And now this. So, and gold. Deep retracement. I told you sell setups after with a wide range bar, and I said that yesterday. We got some sell setups early on in the day on the futures. I said they start with a wide range bar like that. Sell setups typically don't work. It's not out of the woods. Right? We got to see this go sideways next week and see if it can begin to turn up here. And if it does, that'll be a buy. Silver has been stronger. And so far just a trading range, but held up better than gold. So we'll see if this can start to move up next week. And internals are still, they're coming off the way extremes, but they're still extreme, right? Nothing here you don't even have to look at this anymore. I'll look at it, but there's nothing to take away from this. It's either got to come down into this area here where it's worked off that. And then what we'll do by that, let's assume that breadth comes down to 0 or even minus 100 area. Well, you can have deterioration within individual stocks, meaning this may not come down as much. I don't know. I'm just giving you scenarios. Whereas this comes down maybe even to this level. But this is not measuring this. It's measuring thousands of stocks and what they're doing. So if this was to pull back, well, I can tell by the shape of this right now, if it begins pulling back, I'm going to find a whole lot of stocks with toppy patterns. And as this pulls back, and is now, of course, this isn't a live bar, the option traders are going to start backing away from their calls, which now are beginning to lose their value, probably quite rapidly. And so as it comes down here, we'll measure how far the markets pull back and so on. But in reality, we're not going to get any type of a buy signal here. What did I do? was interesting. Pressed the wrong thing. I'm not going to get any kind of a buy signal unless this, right, comes down into here, and this comes down into here. So that's what we're waiting for now to see if it gets there. We got the sell signal here. That's where we started to say, be careful, Will Robinson. And then it went even to a further extreme over here. And as this is starting to pull back, now we'll see what levels it breaks or the lack thereof as these internals begin to come down from those extreme levels. So saying, do you only use oscillator? It's got nothing to do with the spiders, Qs, diamonds, and the Russell, Khalil. These internals have, I shouldn't say nothing to do with them. Whatever the thousands of stocks it's looking at, and this is just a measure of the total put call ratio. It's a 5 MA of the day-to-day total put call ratio. So not while it has nothing to do, it's not measuring the movement of this at all. Right? It's not like an indicator like a stochastic or any of those, indicator-based methodology, hocus pocus kind of stuff. This is a measure of thousands of stocks and what they're doing. So down here is the day-to-day closing prices of advancers minus decliners, and this is a measure. This is a measure of that data, and this is a measure of this data. Okay, we can talk about that another time. All right, so there you have it, and we'll see how things end here today. All yours, Dan.
Good morning. Welcome to Friday's Zero DTE Day. As always, we'll chart on the index ETFs, but individual stocks also. We got a couple earnings that will have high volatility. All right, our opens were very light in the weekly options trader. We have Qs, call spread, so the gap down obviously is helping us out nicely. And so I tighten the stop. Let me give it to you. Here's the new Q stop. Zoom, we have two of them. And then our swing ladder, we have a number of trades. Everything looks fine though. So just ask me if you have any questions on those. Let's see, MC's looking to enter Amazon put spreads, and then JR VXX long. Yeah, the FANGs are always usual suspects for zero DTE. Google's typically the spreadiest. Google and Amazon, the other four are much better spreads. But no, on Amazon, there's nothing yet to bear 1, 2, 3. It is on support, but I have zero opinion on whether Amazon is going to hold the day's low with the bearish gap down here. I have no idea, so I'm not going to even think about it. Maybe for 30 minutes. VXX long. It had a nice 2-bar reversal down here after breaking down. It is gapping up. We trade VXX when we have a bearish bias on the spiders. So if we say, yes, now's the time to short the spiders, whether it's for a day trade or swing trade, then yes, you can take a corresponding long in VXX for a day trade or possibly swing trade. But as of right now, we're getting a bounce here. So maybe we just need more information. Let's see, NSSC gapping down to 26. That was a bearish 1, 2, 3 at multi-month new highs, but gap's too big. I don't know what to do with it. FRSX 270, big gap up, way the heck up here. Something's getting it moving, but it's a mess. CSX, we were watching this gap yesterday, and we never entered it, but I like it as a swing now, a swing or day trade, either one. Under yesterday's low, this is a gap down from a big M top. Price void looks great. So day trade or swing, CSX under the low, that's good to go. Lazar, I wish we saw this one 2 days ago. That would have been a, you know, these things that go just straight up on we're looking for gap and craps or any other bearish exhaustion. And that one happened on Tuesday with a gap and crap. It's gapping down here again. Quebec Sierra. I gave this as a call spread. Let me give it to you all. This is another one that went vertical, bearish gap. Vertical, topping tail. Yesterday I had a bullish engulfing, but now it's a bearish gap. So we'll look to sell an out of the money call spread on that. Oh, do you remember Airbnb? Remember yesterday I was swagging the valuations? Well, two things. Do you remember at 160, the people even in the green room, we had a long talk. I'm like, I want to short this at 165. I think it's overvalued. And stupid things not shortable, IPOs. And then, yeah, there's an article in the journal today that its closing price had a market value of over $100 billion. I mean, that would be a good straw poll question. Does anybody in this room think Airbnb is worth $100 billion? And I think you could, you know, just give me all the S&P 500 companies that are 100 billion and cheaper, and I guarantee you I'll find other companies I'd rather own if I'm going to spend $100 billion. It's and then some woman on CNBC, it's funny how they have to come out and say something to justify. And she was just saying something like, I'm paraphrasing. She's like, yeah, they're just, you know, they're at the point of just not caring about valuation. And she also said it was Fidelity's, Fidelity brokerage firm's biggest active stock yesterday. And I guarantee you it was Robinhood also. And I think even Kramer was kind of making fun of the millennials, saying, you know, they just think everything's going straight up. They don't have the experience, and you know, they're not going to learn until they get run over. OPCH 1480, bearish gap, but not a huge price void. I know, Dallas. I mean, I was thinking the same thing. I'm like, could you imagine a travel company? You got to go sleep in strangers' homes during a pandemic, and you want to come out and do an IPO now? Are you crazy? And that's just shows you the sign of the times we're in right now. That's the long talk we had about it yesterday. Let's see what else y'all got. RMG, Isaac. You can Google it. I think it's like 2 weeks or 20 days. I don't know. Just Google what the lockup period is on an IPO. And then there's I don't know if it's the same rule of when they start trading options. Because I guarantee you, no, Austin, no. 6 months? Are you serious? I thought it was 20 days. Wow. If you all are right, I was way off. Okay, but I know for a fact that they'll start trading options, oh, within a month. And I think DoorDash and Airbnb, they're toys. They're the new toys for traders. So I don't see any reason why they would not open up options on them as soon as legally possible. Jake, RMG. Jake, you know my answer every single day. I mean, I gotta create a little sound clip for you. There's nothing on the daily. It's far from the 20. If you get a bullish setup on the 15 for a day trade, fine. But would I be interested in a day trade on the RMG? Not me. Why, Dan? Why? Why are you being like that? Well, because it's gapping up 15%. It's even far from the 20 on the 15. And I got a bearish market. I'd rather put my hand in a vice than do that. So it's just not my pitch. Now this one actually, well, no, I take that back because now the gap's too big. But this is a better bullish pre-market right here on Disney. Well, let me rephrase that. The gap is huge. The percent is huge. I'm just kind of focusing on this wide range bar and 3 bullish sideways bars. And I think the only news on Disney was their streaming video or whatever has many more people. But look at that. Disney all-time highs. The gap's too big for me, but that's a bullish pre-market. DA wants to short General Motors. I liked it yesterday. I do remember looking at this with you. I liked it. Wow, that will wake you up. So yeah, 5-minute low, 10-minute low. I like it. I like GM short for a day trade. Sure. Pulled in, bearish it consolidated but couldn't bounce. Gapped under the green bar. Price void, bearish close under support yesterday, climactic weekly. So yeah, that's a candidate. CSX, it gapped under the entry, so we use the 5-minute low is our rule. All right, so remember, just like yesterday, so we're perking here just from the gap down, but that doesn't mean I'm bullish at all. It means